Hello, 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 and welcome to another episode of the Titus II Living podcast. This is the February financial check-in with Dr. GMP. So I hope you are excited. First of all, I actually hope that you watched and listened to the January financial check-in. If you did not, by all means, please do so because this we want to be able to build every month that we do the financial check-in. We want to be able to build on your progress, your successes, and even the challenges that you may be facing within your financial stewardship goals and journey. So, with that being said, we have a lot to cover in this time with Dr. GMP. So, let's go ahead and get started. Dr. GMP, how are you doing today?
I am doing wonderful. How are you?
I am well. I am excited because we got some questions from our listeners that we want to see, to give you. But first, I want just a recap of the January financial check-in. So just going back just a little bit, talking about the budgeting and things of that nature, especially dealing with subscriptions that you might need. Okay, subscriptions that you might need to cancel and things like that. Because I can tell you that since then I have looked at the subscriptions that I have, and there were a couple I said, well, all right, do I really? Is it a business subscription? Is it not? Okay, it may be business, but do I really need it right now for the business? Is it being used monthly, or is it being used maybe every 3 months, so to speak? So I just went ahead and canceled a couple of them, and I smiled. I said, I'm practicing the financial check-in tips. What a great sense of accomplishment. So I want our viewers and listeners to know that these are not tips that I'm just having you put out. These are things that I myself am implementing as well. So everybody, I'm with you on this journey. Okay, I want you to know that you're not by yourself. You have Dr. GMP, you have me, you have the good Lord above, you have Jesus and the Holy Ghost. We're all in there with you. Okay. All right. So Dr. GMP, let's talk about a quick recap of January.
So, the recap of January is basically looking at your year and understanding what you want God to do for you in that year, getting rid of excess. So, I do practice what I preach as well. I did have, one or two subscriptions. I look at those annually, typically in January, February. Have I used them? Am I going to use them? If the answer is no, just cancel it because you're just throwing money to the wind, and that's not being a good steward of what God is giving you. Doing a budget, making sure you understand all of your income that's coming in and when it's coming in, and making sure that you have enough money to cover all of your household corporation expenses as they come up, before they come up, so you're not getting into the partial payment race.
Oh, stay right there for a little bit. Let's wait a minute. Let's stay there for a second. Talk about that partial payment race. Talk about it. Talk about it. Mm-mm.
It is an ongoing treadmill of stress, because one, you have to keep up with what you were supposed to pay, how much you put on it, which is not the whole amount. And then when you get the new bill, you've got the new full bill plus what you didn't pay for, and then you have to play the game of, oh well, how much can I put on this new bill before they cut it off and all of that. And so it's just stressful, and it's just a never ending treadmill where if you just make sure that you have the money up front to pay it all and then make sure that that expense is within your budget, then it's less stressful. You pay the entire bill, you don't have to worry about it until the next month. And then you watch it from month to month to see if it's fluctuating.
So let me ask about this. Can you talk about, let's say, the phone bill, your cell phone bill, and let's say you have, um, uh, they have that option for make a payment or payment arrangement or split payment. So talk about that and why you should not do that per se.
So splitting a payment is just not helpful. It's only going to get you behind. So companies know their customers that have a hard time paying their bills. Because it's one thing when you're in a tough spot or you in transition and you've lost your job and you're trying to get back on your feet and you just need a little help versus you don't want to pay your bills and you're trying to take every tactic and advantage not to pay your bills and you're maneuvering. So anytime you start building the habit of not paying your entire bill on time all the time, it's just a recipe for disaster. So I never recommend that you split the bill, put a payment on it, break it up into eights, whatever the case may be. It's just a trap because companies are going to charge servicing fees, they're going to charge processing fees, they're going to charge late fees. And sometimes when you do the agreement, it doesn't stop the fees. Some people think that, oh, if I make this payment arrangement, I won't get a charge, a late charge. They might waive that the very first time. But if you keep doing that month after month, or you have a history of doing that so many times a year, depending on what their records say, they're still going to charge you. And then now with everything tipping and they add fees just to add fees, you got to really read your bills. Come off of auto pay sometimes. You have to look at your bill, get your bill in your hand so you can see what's going on when changes happening. You can review.
Talk about that some more, because I just want to linger there for a little bit. Talk about why it's so important to sit there and actually look at your bill. Why, look at that statement. Look at what is there. All of that. Just talk about that, because a lot of times we just don't.
Reviewing the bill is all about being a responsible check writer. So when you are earning money and you're dispensing money, looking at the bill is doing your due diligence as a responsible person in charge of those funds to say, yes, these are the terms that I agree. I agreed I spent this amount of money in my telephone bill. I agree I spent this amount in my light bill, whatever the case may be. You want to acknowledge one that you're being charged correctly because they do have scammers at companies that pay attention when other people are not paying attention and they slide in extra fees on you. So it's very, very important for you to maintain authority of what's being charged or what's being demanded on what God has given you, so that you make sure that you're paying only what you're supposed to pay. A lot of times, if you sign up for a new service and they offer promotions and the promotion period is over, even if you forget about it, or even if you go beyond the promotional period, if there's a change in the bill, you need to understand why. And once again, take an authoritative position to say, yes, I agree to this, or no, I don't. This is not what you told me. Those types of things. So it's very, very important. If you just let people just take money out of your account or you
Yeah,
just pay blindly, you're
yeah.
essentially becoming to a slave to the bill owner. And
Mm,
that's not the arrangement when you signed up.
talk about it. Oh, this is good. Stay right there. Stay right there. So talk about the terms and services and the agreements and things like that that you have to click to agree or sign to agree, that people just do not read. There's this long list of terms and agreements and all that that they run past just to be able to sign on the dotted line, to click the box, check the box, and all that. But there's a lot of information in those sections. So can you talk about that?
There is. It's very important to read all of that because they can slide in different things, access to your information. There's all types of little things that can be slid into those agreements. And if you're just blindly clicking yes because I want this service, there could be 8 or 9 different things behind the scenes that you're agreeing to that you don't know about. So access to your information, cell phones are a big one. Access to your personal information, access to your credit card information or your banking information, your pictures, your
Mm,
camera.
mm,
If somebody wants to go into your camera and listen to your conversation, everybody's talking about Siri and Google and all the AI and all this. When you sign up for those services, if you don't read those agreements and see what they're trying to have access to and say no, or have a conversation with a customer rep to say, why do you need access to this, what's the purpose, you're just blindly agreeing to it, and then you can't fight it When they say, oh, we've got your pictures that you took back in 2009 when you were on vacation with your family, and now this is part of some investigation because somebody in the background did a crime and you're an accessory because our AI machine linked you to them because you were in the same place at the same time.
Oh,
And you
gee.
you sitting there like, huh?
Come on. Come on. Come on.
And so now you have to explain something that happened 12 years ago, wherever,
Jeez.
it's
Hmm.
just crazy. It's just crazy. So you really have to do, data has become a commodity.
Mm,
And you have to protect your data and your authority of your data like you would your money.
mm,
And all of that's coming together. And you're just signing and click away because you want this one thing. You need to understand there's more things attached to that, and you need to understand what the company wants
mm,
and actually agree to it.
mm. That's so good. Okay, talk about being an authority over your money, your finances, as well as your data. Just hearing that, being an authority over it says so much. So I would love for you to just to cover that.
So, taking authoritative position and being an authority over what God has given you, when you pay a bill, you can tell the company when you want to pay the bill. So, say you sign up for your cell phone or your light bill and it's the middle of the month because you
Mhm.
moved or whatever the case may be. Your bill is going to generate within 30 days of when you started the service. You can take a position and say, "Hey, I'm putting my household, restructuring how I'm paying my bills in my household, and I want my bill to generate on the third of the month so that I can pay it by the fifth of the month, or generate on the first of the month so I can pay it by the third."
Mhm.
They will change it for you. You don't have to pay it when they say to pay it. You can take the
Amen.
position and say, "This is how I'm structuring my household. I need you to work with me. This is what I want you to do." And they'll do it. Because as long as you pay the bill and you're paying it on time and you're paying all of it, they, of course, they're going to do what you want. Now, if you're not paying bills and you're paying half
Okay.
bills and you
No.
constantly making arrangements and
Mm,
constantly making payments and
mm,
got $100,000 in late fees, no, they're you you become a slave to them. You
mhm,
owe them money because you're not being responsible, and so they feel like they have to parent you, and that's
mm,
not what you want.
That's not a good feeling right there. To feel as though you're being parented by a company that you're getting a service from that you're paying. That's not. Oh, wait. All right. So if you're watching this and this is your case, your situation, your current situation, please reach out to Dr. GMP so she can help you get through this issue within your finances and sort through all of this because this is very important. If you are in that place where you are actually a slave to that company or a slave to that institution or whatnot, and it's because you have a bad track record of paying bills timely, paying bills. You have a bad track record of those payment arrangements because that will get people. That will get okay. All right.
That's the
It's
structure of a garnishment. It's a form of garnishment.
mm,
So when
mm,
a garnishment is levied against the payer, that the court system has agreed with the company to say you are not financially responsible, so we are going to pay this on your behalf.
I would wonder who or how many people even think that way to look at that payment arrangement as an actual garnishment. I mean, because just to hear the term garnishment, it's like, the devil is a liar. That type of thing. Like, it's such, you don't want that term associated with, your status and what you have to do financially. But if that equates to what you do with payment arrangements for your bills and stuff like that, then it's a reality that you have to face.
Yes, payment arrangements is a self-proclaimed garnishment.
Mm,
You're admitting that you
mm,
have a problem and you're, raising your hand to say, "Help me." But
mm.
you're putting yourself in a subservient position to the organization, and that's not what you want. That's not what you want.
Ooh, we. All right. So if this mercy, if you are in self-proclaimed garnishment status, so mercy. If you okay, amen. If you are in self-proclaimed garnishment status, please by all means, reach out to Dr. GNP at drgnp.com so she can help you get out of that status. Change your status, because that is not where we want you to be. That's not where God would have you, according to His word. That is not scripture. All right, so let's move on, because that's right there. That's a whole nother show right there. Just self-proclaimed garnishment. Come out in a name. Okay, we'll talk about, maybe we can talk about that more in March. But let's talk about, we do have a couple of questions. We have a couple of, and we'll get to them in a little bit. But I want to get started talking about taxes.
Okay.
Taxes, that lovely conversation that comes around every year around this time. So can you get us started on tax preparation, organization, and moving forward with getting taxes done and submitted and things like that?
The biggest thing is getting organized. If you are a seasoned person who's been working for a while, really it's all about doing what you did last year, unless you have changes. And changes are if you got married, if you got divorced, if you had a child, if you adopted a child, if you're taking care of your parents who are elderly. Major financial changes that are happening to your household is what's going to drive the differences. If you had a major increase in your income and you're investing more, if you bought a home, if you went back to school, any little thing that you're doing, all you have to do is watch your statements. If you're reconciling your bills every month and you're looking at your statements that are coming in, any major change in your life, there is either a bill or a statement attached to it. So just read the bill, get that year-end statement, and then give those year-end statements to your tax preparation person or your CPA and let them do their job. But it's up to the taxpayer to make sure that they are giving the CPA or the tax preparer all the information that's available, because at the end of the day, the IRS is going to hold you responsible. Yes, to a certain extent, they're going to, point the finger at the CPA and the tax preparer and say, shame on you, you didn't double check this, but the responsibility is ultimately on the taxpayer. And so making sure that you're organized, making sure that you're getting all of your statements and you know what you're doing. You have to pay attention to your bills and to your everything, every piece of mail, either whether it be electronically or physically, coming to you. You have to be due diligent about reviewing that information and making sure you get that to the right person.
Okay, so before we move on to another question on that, can you talk about the difference, or what it means to be an accountant versus a CPA? Just kind of go over those for those that may not know.
So an accountant is very segmented. And so
Okay.
you could be an accountant over revenue or accountant over expenses or different categories. A CPA is an expert over a broad spectrum of categories. Now, you can have accountants who are also, like myself, have expertise over a broad spectrum of categories. The main difference between a CPA and a tax accountant or a regular accountant is that their license allows them to take responsibility financially for an organization.
Hmm.
What that means is if the organization is found guilty of malpractice of financial stewardship, the CPA is the fall person that will take responsibility and do the time on the company's behalf.
Okay.
Once I
Okay.
understood that, that was not a space I wanted to be in. But it comes with a more level of responsibility. It also comes with, notoriety, prestige, and things of that nature. But the work itself is the same. But the difference between the CPA and the accountant is that the CPA has put themselves in a position to um, take responsibility on the organization's behalf.
Mm. Okay, so that helps a lot just for anybody that would be watching that has an interest in going into accounting. And they're thinking that going into accounting is just the same across the board. So this would help them make sound decisions, wise decisions regarding a career choice. So
Mhm.
okay, let's stay right there for just a little bit. Talk
Okay.
about accounting being that career choice, what other tips or suggestions would you provide to anybody that would be interested in going into accounting or maybe shifting careers to accounting?
My best advice is to take an accounting class. Take the one-on-one, the introductory to accounting class. There's so much information in that. You either love it or you hate it. And
Mm,
it's not a, oh, I really don't like this, but if I keep taking it or I keep diversifying, I'll no, no. It's numbers. You have to like numbers and you have to like balancing.
mm,
And there's many ways to do everything in accounting because it's all about how much is coming in versus how much is going out and how people see it. Once you understand that delicate balance between those three, um, you're just doing that no matter what industry. The good thing about accounting is that you can go in any industry, you can go globally, you can be in a small bookkeeping firm, or you can be a large, multinational corporation accountant. It's so versatile. You always have a job if you like what you do. If you don't like what you do and you find out pretty early, accounting is not for you. If you take an accounting one-on-one class and it's not something that excites you and really gets you going, don't do it because
okay.
it's just more of the same. It's not going to get different. It's not going to get better. There's no flashiness to it.
A number is a number. Okay. Okay, that's good. So if anybody is interested or thinking about going into accounting or shifting careers, this is a good foundation for them to get the information and make a sound decision. And hopefully they'll pray about it and kind of make wise choices and decisions from there. Okay. Okay, so back to taxes. Talk about, because now we're in a whole new year. So talk about organizing and staying on top of things throughout this year, 2024.
So have a bookkeeping system. So every month when your bills come in and when you pay them, whether you do it electronically, whether you do it by hand, you need to balance your checkbook and you need to be looking at all of your expenses every month and then tweaking your household budget to make sure that your expenses aren't getting out of control. Typically, Christmas time is the big time. I encourage people don't get in debt, running up a bunch of credit card debt for Christmas and birthdays and things of that nature. Try to incorporate those things into your budget throughout every month. That way, you're kind of saving up for it. So once you keep track of all of your money coming in and all of your money coming out, it's easier to do your taxes because everything is categorized for you because you've already looked for it and looked at it and validated whether it's correct or not. Then, as you get your year end statements from your mortgage statement, your 1098s, and from your investments, you're just paper gathering to give to your CPA or your tax preparer.
Okay, so can you talk about the different forms? Because you talked about 1098 and things like that. So talk about the different forms that are that need to be submitted or required for tax preparation.
There are thousands of forms.
Oh,
Your
really?
typical ones for if you're working for someone else, you have your W-2, which
Hmm.
shows how much you earned and any deductions that you had. If you're a 1099, which means you work for yourself as an independent contractor or independent consultant, and a company paid you or an individual paid you, that's not an invoice. It's different between invoices versus 1099s. You will have a 1099. So if someone paid you more than $600 out of their company's payroll as an independent consultant or contractor, you would get a 1099.
Okay.
If you have student loan interest that you've paid or out of pocket student loan or student expenses for education, that's a 1098. Do you have any investment income from a typical savings account from your bank? That's a 1098. Pensions and all kinds of things. They have a form for everything.
Oh my. Oh my. Okay, so go back to the I think it was the invoice versus the 1099. Can you talk
Yes.
about the difference?
So the difference in that is in the 1099, the company has put you into their computer, put your company or you yourself into their, payroll system, but you are just designated as an independent contractor. So they give you a paycheck, but it's not a, a, a W-2 paycheck. The invoice is where you are a business owner and someone contracts you or hires you to do a job, and you either invoice them to pay the invoice before you do the work or after you do the work. That's just depends on your computer. But
Mhm.
you as the business owner have your own system, your own bookkeeping system. I use Intuit and QuickBooks
Okay.
to generate my invoices. So when I do taxes or when I do consulting work that's not for an organization, I issue an invoice typically after the work is complete, and then they pay me directly.
Okay. So that's a great point right there, because it eliminates the confusion that some may have concerning how do I report this income from this company if I'm not on their payroll, um, or I just sent them an invoice, or maybe I just didn't do either and they just paid me. Hey, amen. They just I don't know if that happens, but okay. But they just paid me for this service and things like that. So just I think you're really helping to clarify any questions that someone may have concerning that. So is there anything more about that? Because I don't want to get into people paying people under the table and all that stuff. But amen. All
You
right.
you have to keep track. I do get questions about that. I get, X amount of money from this little side job that I do, and they just pay me cash and this, that, and the third. You have to report every piece of money. So even if you don't issue an invoice and they just pay you cash, record that. This is why you need to have an accounting software system or a bookkeeping system so that when you pull your banking transactions in, you can
Mhm.
identify and categorize that income, whether it's coming in from a 1099 or you invoiced it, or if it was just cash, because every piece of income has to be accounted for. The IRS, it was like a running joke in the financial world, but the IRS now is requiring people that do cash jobs um, to account for their income that's being deposited. So there's a questionnaire out there. If you sell drugs, or if are an exotic dancer, or if you are a cashier or a
Mhm.
waitress, or different things that rely on tips or money that is being exchanged not in the traditional manner.
Yeah.
um, there was a questionnaire attached where they were expecting people to fill that out.
Mm.
And typically, if you're engaged in cash transactions like that, you're not interested in the IRS knowing about it.
Okay.
Um, so for the IRS to issue a questionnaire expecting people to fill it out was a little hard to take, because we just couldn't see people filling it out voluntarily.
Yeah.
So, but that is the expectation. They were making a point that regardless of where your income is coming from, you need to report it. And so to double down on that, if you're making deposits or withdrawals greater than $600, which is the threshold for receiving a 1099, they're tracking it.
Mm.
So if you're getting money from all these different places, no matter
Mm.
how fast you spend it, um, it's
Mm.
being tracked.
Mm.
And you don't want the IRS to come knocking. So either change your career path so you can legitimize what you do,
Mm.
or just report it and pay the taxes on it.